This is a Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner. I appreciate your time and listening in. We're talking about Conservative Investors 411. What information do you need to know as a conservative investor? The Fed just lowered interest rates another 25 basis points. Well, wake up on your CD renewal. You're not going to get that 5%. You're probably going to be in the 3s. So what alternative is there? We talked about a CD being a guaranteed return of your principal, and that is based on the FDIC insurance. We talked about a fixed annuity. That is based on the claims paying ability of the insurance company. Lock in your principal, get a fixed rate of return based on the contract you enter with the insurance company. And then the other vehicle we talked about was a fixed indexed annuity that locks in your principal from downside risk. And your crediting is not a fixed rate. It is based on an index. Could be the Russell 2000, could be S&P, could be the NASDAQ. And based on the contract terms, which again, I reiterated in session 2, that these contract terms can be very, very complicated. And the fine print can allow the insurance company to modify the crediting within the term of your agreement. A lot of times these run for 10 years. And if you surrender early, then you're going to have a surrender penalty. And those usually decline from 1% per year. So it could be 9, 8, 7, 6, 5, 4, 3, 2, 1. So if we hold it for 10 years, then we're not going to have a surrender penalty. If we surrender at year 5, we may have a 5% or 4% withdrawal penalty. But the principal is protected from downside risk in the market, and any interest that is credited to your account also gets locked in and not exposed to any market risk. So if this sounds too good to be true, a lot of times it may or may not be. So we're going to look at that. So you need to make sure that you understand the terms and conditions within that agreement. And it is a contract between you and the insurance company. And being a tax attorney, there are the details in the fine print. So if you've been to a dinner seminar and they're talking the nomenclature, we have a hybrid. This is a hybrid. Well, let's call it what it is. And if you've been hearing this word hybrid, we're going to invest in this hybrid, and therefore your principal is going to be protected. And when the market goes up, you're going to participate. But when the market goes down, you're not going to participate. And would you be interested in evaluating this hybrid product? Well, let's call it for what it is. It's a fixed index annuity. And if you've been touted this, and you went to a dinner seminar, or your insurance agent has this magical plan that they're going to help you with your investments. We're going to protect it from downside market risk, but we're going to capture the gains and lock in those gains. And this is for a conservative investor, you, the retiree. Well, immediately stop, put your car in park, get a second opinion, and do give our office a call at 404-250-9798. That number again, 404-250-9798. We can meet down in Columbus at the Cunningham Center, or we can meet in Atlanta if you want to challenge the new exit ramps on 285 and the traffic, as we are known throughout the country as the traffic capital of the world. Then we can meet here in Atlanta, or if you're out of town, we work with clients in all 48 states, plus the other 2, Alaska and Hawaii. Then we just hop on a Zoom call and we evaluate what is actually transpiring. So if you're a listener of the Professional Edge in, let's say, Idaho, let's hop on a call. It's all good. I have clients in Utah, and they're getting a lot of snow right now. So let's go forward on the Conservative Investor 411. So that's a fixed index annuity. They are a complicated product. When the contract comes out, it's 100+ page little booklet that the insurance company. Now, if it takes 100 pages to explain what this simple hybrid method is, it's a complicated financial instrument. So you as a conservative investor need to understand what is actually transpiring within this quote simple investment strategy of participate in the market when it goes up, never when it goes down. So that's another conservative investor tool that you can utilize to protect your capital. The other thing you can also do is put a stop in on your portfolio, which means if the price goes to a certain level, it declines in value, then you want to sell, and that's the order that you want to sell at a fixed price. So if the stock, again, is trading at $100 a share, and you want to lock in that gain, well, we can put a stop in 10% below, 2% below, 5% below, but you don't want to get stopped out and have the stock rally back up again to a new all-time high. So we evaluate where that needs to be. Inside a qualified account makes the most tax sense. And therefore, if it sells out or stops out, then you sell your stock and you don't have a capital gain because it's inside that qualified account. So being a tax attorney and a certified financial planner and a CPA, we integrate this into the planning. Now, your stockbroker is not licensed to give tax advice. They're going to say, well, it's generally this and it's generally that, but you as a conservative investor don't want generalities. You want specifics. So therefore, move to where you are getting tax advice that from a licensed CPA, tax attorney, as it integrates with your overall portfolio. Because we all know your overall return is based on what you get to keep, not on the gross return. So if you have to pay 30% of your income to the Internal Revenue Service, then to be honest, you have to actually reduce down your rate of return by 30% because that went off to the Internal Revenue Service. So again, having this as an integrated approach makes the most financial sense. So one way to take advantage of that, to initiate and see how we at estate management counselors begin working with clients, I welcome you to go to emcthebundle.com. That is Echo Mary Charlie, thebundle.com. And that allows you to get your estate plan done, which unfortunately, half of our listeners here on the Professional Edge don't have any sort of estate plan in place. We all know there's no guarantee for tomorrow, so we are definitely going to need an estate plan one point in our life. And at that point, then we want to make sure our affairs are in order. Do you have the right beneficiary designation? Because if we don't have that beneficiary designation correct, then we can actually disinherit our kids. Think about that. What if we're young and we pass away and the surviving spouse rolls that over? It's going to be a non-taxable event, but she can now leave that to husband number 2, or he, if the wife passes away, can leave it to wife number 2. We know that with individuals living a lot longer, that there is a high probability that they will meet or marry someone, and therefore that beneficiary designation needs to be controlled. So being a conservative investor, you got to have your estate plan in order because, again, it's what you get to keep. Because if you, do your estate planning correctly and you have some missed tax elections, then it could be very expensive for your surviving spouse going forward if you don't plan your estate properly. Yes, there's a step up in basis. We have to consider that. We have to consider your beneficiary designations on any annuities, on any life insurance. Who is that paid to? How is that going to be structured? Because a lot of people get a windfall of that life insurance proceeds. And sure enough, who's going to bring the check to them? Well, the insurance agent. And the insurance agent is going to say, have I got something for you? Now, being a surviving spouse, you are in a cloud and you cannot, quote, make good financial decisions. But it sounds too good to be true. The insurance agent's going to sell you a fixed index annuity, and boom, you're in the weeds right then. And again, it's a complicated product. I can't stress that enough. And within the terms and conditions, after year one of that contract, majority of these that we've reviewed, the insurance company has the ability to modify the crediting of that contract. Now, I don't think that's fair. I think a contract should be a contract, not a modifiable contract. And it deals with your money. So be very wary, and especially if you hear the term hybrid, you may hear it on a dinner seminar that you attend, and somebody's talking about this hybrid, and they're giving it a name, but they're not telling you what exactly it is, but they want you to come in for a free consultation, and lo and behold, it's actually a fixed index annuity. So call it for what it is. If they don't call it for what it is, buyer beware. So if you are considering a fixed index annuity, do give our office a call at 404-250-9798. That number again, 404-250-9798. So as a conservative investor, 411, we have a CD to protect your principal. We have a fixed annuity to protect your principal. We have a fixed index annuity to protect your principal. We have a stop that we can place on your investment account. We want to place it in the right account if that is something of your concern, of the protection of the principal, not a return on the principal. Because as you transition into retirement and later years of retirement, you just want to protect that principal to leave your legacy, but you also want to be prudent to get a reasonable rate of return on that. You don't need to hit the cover off the ball and get that 28-30% rate of return, because with that rate of return comes a rate of risk. So again, to evaluate your portfolio, to get your estate plan done, being a lister here on the Professional Edge, that's the only way you can find out about this, is visit emcthebundle.com. That is Echo Mary Charlie, thebundle.com. Or give our office a call at 404-250-9798. That number again, 404-250-9798. My name's Sean Todd, tax attorney, CPA, certified financial planner, host here on the Professional Edge. I appreciate your time and listening in.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Sean Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Sean, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Sean Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Sean is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Sean Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Sean Todd by calling 1-877-654-9798. That's 1-877-654-9798.